Hi, welcome to Wall Street Confidential. I'm Deborah Borcher, and I'm joined with Jim
Deborah,
Cramer.
how are you?
I'm good, but I'm doing much better than the commodity markets, which
Yes.
are continuing to slide, and they had been so robust.
Right.
But now we're seeing this slide, and it's looking a little more prolonged
Right.
than what we thought.
Exactly
so
right, Deborah.
what do we do here? Do we...
All right, first let's talk about
Short.
the stocks themselves.
Okay.
Well, I think the stocks are going lower. I have been waiting to rebuild some positions for action alert. I mean, I owned, this is a good example. I owned 2,500 FCX, sold it on the way up, kept 1,000. Why did I keep 1,000? Well, because it's a great company. It's going to earn a huge amount of money. But I haven't bought any in 30 points. 30 points, I've stayed away. And same thing, Devon, I had bought some lower, sold some, no desire. Deere, sold a lot at 70, no desire. And let me tell you what I think is going on. Without a coordinated easing by China and Europe, these stocks themselves don't have dividend protection. They don't have buybacks, and they're owned by hedge funds. Goldman Sachs put out a great list of hedge funds, great list of hedge fund favorites. That there really is very difficult. It's very difficult to get your arms around what would cause them to drop. And the piece that I did for RealMoney.com, I spent the whole weekend on. We have to repeat. It looks like we have to repeal the whole move.
So is this then we're pulling back from the fundamental story and it's becoming a hedge fund story?
I think that it's becoming an ownership story, who owns them. But,
Okay.
I don't, I guess what I'm saying is they on their own will not bottom.
Okay.
That without central bank action and without Chinese rate cuts, they will not bottom.
Well, that's
so
where
what
I
you
was
have,
going
right.
next, was China, because
Right.
China's been getting the blame that
Well,
it's
that's
all
right.
their
I mean,
fault.
China stopped ordering. So, I mean, what you end up with here, Deborah, is it's not a level that these stocks bottom at, because there's no bottom. I mean, I own Capital Oil and Gas. I sold 2,000 shares between 40 and 45. I took a loss, and it's at 34. I don't want to buy that stock back.
So it sounds like you're looking at shorting.
Well, I don't short.
Okay.
But I am
But
saying.
people out there.
I think that even down these declines, I've been saying stay away from fertilizer. I've been saying stay away from coal, stay away from steel. I keyed on why I like natural gas only because of the long-term implications of the Boone Pickens plan, which I think is going to be adopted. And that my only exposure in that group is nat gas and alternative energy plays that have to do with wind. They're not doing well.
Okay.
But I would emphasize that the decline is a spiral. And we should do a couple, I want to do a couple videos about this, but the decline's a spiral. And it has as much to do with the decline in assets at hedge funds as it does with the support, the lack of support technically, and the lack of support from the central banks.
Right. Thank you so much, Jim. And stay tuned for more at thestreet.com TV.